All right, let's talk Valero. Their latest earnings report just dropped, and wow, the market reacted in a big way. We're going to break down exactly what happened, what drove the numbers, and what it could mean going forward. Let's get right into it.
So right off the bat, here's the market's reaction in a single number. The stock shot up almost 7% in one day. That's a huge move, and it tells you one thing. Wall Street loved what they saw. So the big question is, what was in that report that got everyone so excited?
And here's why. Just look at this. The experts, the analysts, they were forecasting earnings per share of about $3.10. Well, Valero came in and posted $3.66. I mean, that's not just squeaking by. That's a knockout punch, a massive beat that completely blew expectations out of the water.
Okay, so let's frame this up. The main headline, the big story here, is that this wasn't just a good quarter. This was a stunning outperformance. So here are the headline numbers. We already saw the earnings per share, that incredible $3.66, and they did that on revenue of over $32 billion. Both of those numbers just crushed what the analysts were predicting. It really set the stage for a super positive earnings call.
Okay, so we know what they did, but the real question is how did they pull it off? To figure that out, we've got to pop the hood and look at the engine room of the company, its different business segments. This is where you see the real story.
And boom, here it is. The refining business was the absolute hero of the quarter, no question about it. It pulled in a massive $1.6 billion in operating income. I mean, that's the powerhouse. Ethanol also had a fantastic record-setting quarter. Now, you can see there was a little bit of a weak spot in renewable diesel and actually lost a bit of money. Management chalked that up to some policy stuff and issues with feedstock costs.
Okay, quick sidebar. To really get the next point, we need to understand one key term. Throughput utilization. It sounds complicated, but it's not. It's just a fancy way of saying how much of their refinery capacity they're actually using. Think of it like a factory. A higher number means you're running it closer to full speed, which is exactly what you want to see.
And that's why this quote from the CEO is so important. 97%. Think about that. They are running their massive, complex refineries at pretty much full capacity. I mean, they're firing on all cylinders. They even set all-time records in a couple of regions. That kind of operational excellence, that's how you turn good market conditions into absolutely huge profits.
All right, so that's the quarter itself. It was fantastic. But now let's zoom out a little bit because, one great quarter is nice, but serious investors want to see a solid long-term strategy. What's the bigger picture here?
And a huge piece of their strategy is crystal clear, giving cash back to the people who own the company. We're talking $1.3 billion returned to shareholders in just one quarter. And look at how they did it. The huge chunk of that was stock buybacks. That's management putting their money where their mouth is, basically saying, we think our stock is a bargain and a great investment.
It wasn't just about buybacks, though. The whole earnings call was filled with talk about their core focus, running the refineries reliably and keeping a tight grip on costs. They also gave some updates on big projects they're working on, like a major upgrade at their refinery in St. Charles. That one's a big deal. It's all about making more of the really profitable stuff, and it's set to come online in 2026.
So, why does all this operational focus matter? Well, the proof is in the pudding. Just look at this chart. Over the last year, Valero's stock is up 26%. The rest of the energy sector? Flat. I mean, completely flat. So this isn't just a case of a rising tide lifting all boats. Valero is in a league of its own, absolutely crushing its competitors.
Okay, so that's the review of Q3. Awesome quarter. But now we put on our analyst hats. We have to look ahead. What's the story going to be for the next quarter? What's the play here?
So putting it all together, the incredible execution, the commitment to giving cash back to shareholders, and what sounds like a pretty positive outlook from the company itself, we're giving Valero an outperform rating. They've just built such a strong foundation this quarter, and it really feels like that momentum can continue.
But what could push the stock even higher? What's the next big catalyst? Well, there was a really interesting tidbit in the Q&A session on the earnings call. Management started talking about the tightening sanctions on Russia. And they said something like, yeah, in the past, sanctions just moved oil around, but this time feels different. If they're right, that could be a huge deal for their profit margins, what the industry calls crack spreads.
So this all leads to let's call it a wild but plausible trade idea. Here's the thesis. The new sanctions on Russia actually work this time. They take real supply off the market. That would cause profit margins for refiners like Valero to soar. So the play would be to find a good time to get in before the next earnings report. And the catalyst?
the Q4 earnings call. If management comes out and says, yep, our margins are exploding, that could trigger another huge move in the stock.
Now, of course, this is just our analysis based on the numbers. It is absolutely not financial advice. You've got to do your own homework. Thanks for tuning in.